The UK election is now just days away, this Thursday, but to be honest, it doesn't really feel like this election is much of a big deal, at least not compared to previous ones where, we had Brexit as a key focus point and lots of heated discussions about that. Perhaps this time it has something to do with what the polls are showing us. If they end up being accurate, then Labour is about to have one hell of a landslide victory. So maybe it's just that everyone is expecting a Labour win. According to the FT poll tracker, which aggregates several polls, Labour's lead is the widest since 1997, and no ruling party has recovered from such a large polling deficit so close to an election. And it's not really hard to see why. Inflation and the cost of living has skyrocketed in the past few years, and as we go into this election, inflation may have slowed, but the cost of living crisis is still very much a problem. Economic growth has fallen behind other major economies. There's been so much drama within the Conservative government. We've had 3 prime ministers since the last election. That was just 4 years ago, and a whole series of controversies. And then there's Brexit. I mean, it seems to be a bit of a taboo subject these days, and I think that kind of shows how successful it's been. Not very. Now, given the gap in the polls is so wide, the markets could be fully pricing in a Labour win at this point. I'd still expect a reaction in UK assets when the winner is announced, but will we see much more than that? If we cast our minds back, Liz Truss's mini budget is still pretty fresh in our memories, and that happened just after she became Prime Minister when she announced her growth plan. Essentially, it was a ton of government spending which would be funded by borrowing. So UK government bonds had a major sell-off, causing yields to spike, and the Bank of England had to step in to stop the collapse of over-leveraged pension funds. Liz Truss was quickly removed from power and became the shortest serving Prime Minister in history, outlived by the lettuce, as I like to point out. Now, Starmer and Sunak have seen firsthand the impact that markets can have on them, and I don't think it's a coincidence that they're being very cautious when it comes to speaking about fiscal policy. So do I think that we're going to see another mass sell-off in bond markets? Probably not. You have to imagine they've got the message from what happened last time. But both parties do have spending plans, and neither of them have really detailed where that money will come from. More borrowing may spook the markets again, but higher taxes could lose them voters. But I guess that's a problem for the future, right? Now, so far, the markets haven't seemed too bothered about the election. Bond volatility is the lowest in 2 years, and the pound hasn't really moved that much since before the election was called, possibly because Labour have had such a significant lead right from the start. The last time there was such a big gap in the polls, like I said before, was in the 1997 election. And when that happened, the pound didn't really move that much in the lead up to the election. And once the results were in, it was also fairly stable. The FTSE 100 was a bit more active, with bullish momentum increasing in the days following the election. But a more recent situation was the 2019 election. It wasn't such a big gap in the polls, but still a significant gap. And that time around, the pound did have a bit of a reaction the next day, but it quickly faded. And it was a similar situation as well for the FTSE, as you can see. Now, of course, it's important to keep in mind that the context around each election is totally different, and there are other factors at play outside the UK political situation that would be impacting the markets. But by looking at previous situations that had similarities, it gives us a historical comparison, and that helps fill the gaps that would be left if we were just using situational or theoretical analysis. So that means our probability estimates of the potential outcomes can be much more complete. So the election itself could shape up to be a bit of a non-event. Maybe an initial reaction when the results are out, but even that could quickly fade. There are some caveats here though. A coalition government, for example, is completely unexpected, and that could lead to volatility. And you never know, that could happen. There's also a heavy focus on central bank activity at the moment, not just in the UK, but also around the world. At the moment, like with other major central banks, there's an expectation that the Bank of England is on the verge of cutting rates. But economic data isn't entirely following the right script at the moment. So there's this uncertainty about monetary policy that could be overshadowing the impact of the election. If all else was stable, perhaps the election would be more meaningful for market decisions. But with all that being said, it's what happens after the election that matters a lot more. Like, whoever wins, how are they going to address public debt? They've said they're not going to be cutting spending, so will that be funded through tax increases or more borrowing? If they increase borrowing, bonds could sink again and push up borrowing costs. There's also the inflation issue. How will Labour's policy of a genuine living wage impact wage growth, which has already been contributing to sticky inflation? If it continues to be sticky, we may see pushback on the Bank of England's planned rate cuts. And what about the economy? Could closer ties with the EU boost economic growth and the stock market? Possibly. It's likely that the markets are fully pricing in a Labour win, but there's still uncertainty over how these issues will play out. These are things that could create volatility in the future. So, first step, let's see what happens on Thursday. After all, despite what the polls are showing us, they're far from perfect, and we all know, even from recent memory, just how wrong they've got things before.